From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. I'm Nadine Blaney here with Kyle Rada. You find that funny when I say that, don't you?
No, I'm just so happy to be here. I took a day off yesterday. It was nice to be down in Melbourne, but I missed all the action and I missed being on this program with you. So I'm just glad that we're back and the market's back as well.
The market is back. Okay, so let's take a look at a bit of an overview of what happened today. We came out of the gates pretty strong and really, we remained that way. So finishing the session, it looks like well into positive territory. I'm pretty excited about this myself. Love seeing some green on the screen and love it when we've got, there you go, lots to talk about. We had the stocks gaining, as you can see there. We had lithium, big lithium M&A, but I shouldn't just have called out in our three themes, lithium M&A. I mean, the best performer today is United Malt Group. So you've got the money. There are targets here in Australia, apparently is the story. And we'll also talk a little bit about retail sales. In fact, why don't we just, I don't know, it just seemed to lukewarm. It didn't really confirm any bias to either direction, just the fact that we're seeing things soften as expected, correct?
Yeah, well, I had a chat with David Flanagan actually not so long ago this afternoon, and his takeaway was more or less that. It confirms we are getting that kind of weakness coming through for the Australian consumer in particular. In fact, the ABS noted itself that we are still seeing those signs of, I guess, consumption patterns shifting from goods to services, and that sort of serviceness activity not picking up or keeping pace with what was happening obviously during the big boom in demand for goods during the pandemic. So it was a bit higher than expected, but it still confirms that sort of weaker trends, and it gives the RBA probably reason to say, well, yeah, we can probably pause just on the basis of that, with the obvious caveat that we do have the CPI indicator tomorrow, and that's what we'll be watching. Okay,
we'll get there in just a moment. You know what snapped a 3-session rally?
What?
Gold. Let's get to some of these sectors of the day. It was a pretty risk-on environment. So take a look at the energy sector. So we saw the energy stocks doing really well after we saw the oil price rally in the previous session. And that is despite some consternation that the Labor government's agreement with the Greens to get this carbon cap into play would be detrimental to these energy companies. But, Beach Energy, for example, up as much as 7%. That is on its best day, on track for its best day since the beginning of August. Of course, we were seeing a lot of enthusiasm in the oil market.
Yeah, sort of that really strong lead, I think, from Wall Street, and that, deal done for SVB, I think, supporting some of those cyclicals. So that was the theme on Wall Street last night, flowed through to the local market today. Energy up by 4.22%. Woodside Energy, obviously a big reason for that. But materials are also 2% higher, 1.1% gain for the financials as well. The banks, here's the minus, of course, as you can see that there too.
That's pretty solid, 2% for BHP. This was for the materials space. I think it was the best performance in about 4 months. I love a fun fact. I go home and tell the kids. I'm kidding.
No.
I'm really fun at a party. Let's get a look at these banks, because if you want the day to go well, you really do need the banks to come to the party as well. And while they didn't necessarily hugely outperform, still it's pretty solid when you consider the makeup. And we've talked so much, and I had a conversation with Alex Pakoulis from Harper's Bernays today talking about defensiveness in portfolios and allocating to sectors like healthcare. Well, it did not do well today. The healthcare space, one of the worst performers in terms of sectors.
Yeah, actually, I was penning a piece about this over the weekend, which was this sort of shift from cyclicals or value back into growth, high quality names in the United States. But yes, exactly, put it on ice. So we've seen that reverse a little bit because, the NASDAQ, as we've noted a few times, which healthcare and IT stocks here, obviously in Australia too, track quite closely, performed very, very well over the last few weeks as we've seen these ructions in the banks. Cool expectations for rate hikes, but again, that's been unwound. It was all about cyclicals today, all about that value factor. So naturally, healthcare down 0.95%, IT stocks down 0.62%.
Okay, so it looks as if the S&P ASX 200 will close up close to a percentage point, 7,027. We still do have the big match out, or the final match out to go for the ASX, but let's get to some of the top corporate stories. Because it really was M&A Tuesday, I guess you could call it. Liontown, you cannot look past this. $5.2 billion bid for Liontown coming from Albemarle. So big global behemoth. And Albemarle coming out and taking a swing at Liontown. I love how M&A is a little bit gossipy, isn't it? Saying that the board has not meaningfully engaged after the board of Liontown told shareholders to take no action on the deal. Check out this share price gain that we saw for Liontown Resources, 66%, and the reverberations felt right around those lithium names.
Yeah, so motor racing, you call it getting caught in the draft, and that is exactly what happened in Core Lithium and the other lithium players today. You can see they're up 15%, but if you go around basically the top 5 for the session, which we will look at in a moment's time, but I will spoil the party a little bit. Allchem also up by 14.3%, and Pilbara up by 12.5%. So all of the lithium names benefiting from that deal.
Okay, if we get to some of the other big company news, Chalice Gold Mines, I'm just sticking with the theme here in the resources space. It was up after it upgraded its mineral estimate at its project in WA. But yeah, back to the M&A front and United Malt Group. So it has got a $1.5 billion takeover proposal from Maltese Soufflé. It is, yeah, there you go. Studied a bit of French as a kid. The accent is terrible. But anyways, the United Malt Group is playing ball. It is offering due diligence to assist with that binding proposal. So the indicative proposal is for $5 cash per share. And it's a French company, ausbiz, obviously. And yeah, look at that share price gain off the back of that.
Yeah, 31%. So a really cracking deal, and obviously an endorsement for, well, effectively what is one of Australia's ag businesses overall there. But other news, Origin.
Yeah, Origin, Brookfield and Origin getting together, coming to the party. I thought it was interesting to read some of the analysis that was put through on Reuters, saying that, yeah, obviously Brookfield very willing to pay up, and that is despite, you know, a lot of the consternation about this carbon cap that is being put forward. Despite these energy policy headwinds, this $10 billion deal is gone through, and guess what? That was stock of the day. Take a listen to what Koshi's guests had to say on the call today.
It is easy to say, because what came head first towards those companies over the past decade has been quite, let's just keep it civil, challenging.
Yep.
And I mean, and that's very, very difficult when you're in the thick of it, of turning those companies around and make the challenge an advantage, which they obviously couldn't.
Yeah.
I mean, but I think in a broader sense, the whole move away from fossil fuels, which even though some people doubt it will happen, but it will happen. I think maybe the underlying sentiment here is it will create both winners and losers. And
shareholders should be relieved that they're actually getting more money than they would have got a little while ago. But you know, when you consider the share price was $12 to $14 10 odd years ago, and we've had some inflation since then, and they're not getting anywhere near $12 to $14 today, but they're getting more today than it was probably worth today. Yeah. And I think one of the silliest things
We cut off Howard Coleman from Team Invest. Unacceptable. So there's a view on Origin, but I mean, it's a done deal. It will be going into the hands of private equity, a Canadian Brookfield-led consortium there.
Yeah, absolutely. It seems to be the way of the world sometimes, or recently. There's a lot of that action kind of going on globally. But well, let's get a wrap of the day now, shall we? And fittingly enough, we welcome to the COB Josh Gilbert from eToro. Josh, great to have your company today. Just a little bit of a read on the overall market just to begin with. Obviously fairly positive. Some of those concerns about growth and banks and all those sorts of things easing on Wall Street, seemingly flowing through to the local market as well.
Yeah, and I think it's probably a well welcomed gain on the ASX. I think last week was the 7th straight decline for the ASX, one of the worst runs we've had on decades. So any green on the market we're going to welcome, but as you say, yeah, that sort of positive flow from Wall Street, a little bit less optimism from obviously the tech sector overnight, and also we're just getting a slightly better read on the commodity side as well. You mentioned it a minute ago in terms of that boost from oil, which is obviously going to help the local market. Energy has bounced back pretty strongly today after struggling yesterday as well. And then obviously gains across the lithium space today as well. So here's to hoping that can continue into the end of the week. If we can get some weaker than expected inflation data tomorrow, I think that could give us a bit of a boost. But here's hoping for a green week to end this week.
Okay, well, I'm just going to remind you both that it is Tuesday and there is still a lot to get through before we make it to the last call drink in hand on Friday. Again, getting ahead of myself. But what you've got to put a lot of this in, I'm not going to say enthusiasm, but settling down of markets, even across the Asian region today, is that we've got those real fears of a banking contagion being contained when we've got Silicon Valley Bank being bought by First Citizen. We've got the regulators looking to back it. When you think of this banking crisis, where does the sort of house view at eToro sit in terms of if there is still more pain to come? Because everybody that I've been speaking with today say that we still need to pay very, very close attention to those US regional commercial banks.
Yeah, look, I think our view on it is that we still think that these bank issues are sort of individual, and that we don't believe that it is systemic. We think that they lie within the banks that have had these sort of particular issues, and we think that in terms of how we've seen policymakers act in terms of how the Federal Reserve have stepped in. Ultimately, let's remember, go back to when the Federal Reserve was set up. That was their job, right? This was their job to sort of look after these banks. Yes, this is going to change the sort of the macro environment that we're obviously going to see. Start of March, we were obviously thinking that markets weren't probably pricing in a rate cut. Now markets are pricing in 3 rate cuts by the end of the year. So I think it changes massively on the macro front. As I say, we don't think that there is much contagion that comes from this. We think that this is pretty well contained. Again, yes, there's probably still conversations to be have over those sort of smaller regional banks. We think that the way this has been dealt with and how quickly the policymakers have acted, that this isn't going to be systemic, and ultimately this will be contained to the US. And here in Australia as well, I think the markets are thinking that ultimately we don't have anything to sort of worry about, and especially across Asia, which is why we've sort of probably avoided much of that conversation that's gone on across obviously the US and Europe within the last couple of weeks.
Bringing it back home now, I know, well, both you and I have, I suppose, retail trading in our blood to some extent, so we know what the traders are like, we know what they like to buy quite often, and lithium is more often than not at the top of their list, or it has been the last couple of years. Now, we know a few hedge funds today have probably been torched by this move we've seen in the lithium stocks, massive short interest there. But when it comes to the retail space, generally pretty long. I would imagine there's a few happy eToro customers from the movements that we've seen in lithium over the last few hours in this session.
Yeah, look, absolutely. You've said it, nail on the head. Lithium is by far one of the sort of the biggest interests for clients, at eToro globally and here in Australia. It is those sort of lithium stocks. I think Pilbara is by far the sort of the client favorite there in that sense. And I think, what clients are looking at here is they're looking beyond sort of shorter term movements. They're thinking ultimately what's going to be happening with not just the electric vehicle space, but just sort of clean energy long into the future. This isn't a short-term view that they're taking. This is absolutely a long-term view. Yes, we've seen the lithium price, sort of almost come off by half, I think, since its sort of peak. But we've got to remember it's still, well above sort of levels that we saw in sort of 2020 and 2021. And I think that consumption of lithium is just only going to increase. EV sales growth is expected to slow down this year, but ultimately we're still going to see more EV sales than we did in 2022, and that sort of penetration into the light vehicle space is going to increase again this year. We're going to be having at least 10% of all light vehicle sales globally in EVs this year, and investors are understanding that they're investing for the future. They're not investing right now onto these stocks. Yes, we saw some great gains across the lithium space today, which they'll love, but this is a long-term play, I think, for retail investors, and I think that's quite obvious, even when we're sort of still seeing that sort of shorter-term pain. Pilbara, I think, before today was down about 25% year to date, or in the last 6 months. And then, even with that, we're continuing to see retail investors add to their positions. So it's definitely a long-term view on lithium.
What else is being traded heavily on the eToro platform? I just note that today we've got Xero, one of the worst performers, obviously reflecting some of the tech sell-off that we saw on Wall Street, even though they're very, very different quality of companies in many respects, and that's no slight on Xero. I'm just pointing to the fact that, we've got Zip down as well here in sympathy with what happened in the US. So where are some of the other trades going through on eToro?
I mean, I could start with Bitcoin, where we've seen a big uplift there, about a 70% increase in sort of trading volumes compared to what we had in for the average week so far in 2023. So that's massively increased. I think we can put that down to a couple of things. Firstly, obviously, that fall in inflation expectations and interest rate expectations, obviously in the US on the back of this banking crisis. I think that's the main reason we've seen that. Lower lower inflation environment, a lower interest rate environment is obviously making investors feel more confident about taking on risk. But also I think it's pointed towards the fact that if investors are feeling uneasy about sort of centralized banking systems, they will turn to decentralized assets, such as Bitcoin or Ethereum or other decentralized assets. In the last couple of weeks when people have struggled to gain capital, gain access to their capital, crypto has sort of continued to sort of do its thing and sort of flex its prowess ultimately. And I think that's really important. I don't think this has been the main driver. I think that helps the narrative of what maybe has happened over the last couple of weeks. I don't think that's been the driver of it. It has simply been the macro, I think, that has driven that. So we've seen some big increases there. And again, that then comes back to that sort of rotation into sort of tech as well. We've seen a big uplift in sort of tech trades as well, simply because investors are feeling that they can sort of take on more risk. As I said earlier, markets are now anticipating 3 cuts by the end of the year. Jay Powell has said that won't be happening, but investors are sort of taking the opposite view of that and feel that they can take on a bit more risk and are adding tech back to their portfolio with names like Xero, etc. And I think that's where the ASX does sort of struggle sometimes, is when we do see this sort of rotation out of defensive into into tech and higher risk. We do struggle because of that such low exposure. We're under about 3% to tech on the ASX 200. So that's why we've probably seen this underperformance against global markets, especially in the last couple of weeks.
Josh, great to get your insights. Looking forward to the next time we can get you back on the COB. Have a great afternoon. Josh Gilbert there from eToro.
Thanks, guys. You take care.
Okay, let's just quickly, Kyle, go through what's happening overnight. And we do have another Fed index to get through. We've got the Conference Board March Consumer Survey, which will include some of the banking woes. Tomorrow here, though, it's all about inflation, the monthly CPI indicator, up 7.4% last time around. Housing, food, recreation and culture. But that's really what's on the agenda here tomorrow.
Absolutely. And
let's get to some of those market leaders to find out. I mean, I feel like we've had this conversation, but look no further than what went on in the M&A space, right? Resources, Liontown, United Malt Group, and then that's incredible, isn't it? All but one in the lithium space. And those aren't just small gains on the screen. That's massive.
yeah, you just know that there's someone out there that's just been 80-90% of their portfolio in lithium has just had the best day of their lives. So looking very, very robust there. And of course, too, United Malt Group, another big story of the day, up 31% we'll call it.
Yeah, we have an interview up online, and it will be available via the show notes, from Henry Jennings at Marcus Today. He talks about this whole lithium frenzy. And also, as a PS, Ben Richards joined us from Seneca Financial Solutions, and he pointed to some of the potential for M&A in the nickel space after Andrew Forrest's Wyloo Metals made that bid for Mincor. So if the materials space, if some of those small cap miners are your bag, you'll want to get onto our website or listen to those interviews via the show notes. Laggards, let's take a look at what did lose ground today. Look no further than, there you go, some of those in the sort of growthy tech areas of the market.
Yeah, Xero down, most of all 3.26%. But Kogan also in there, although that comes off the back of a decent rally last week for its stock, although the losses were fairly modest, generally speaking. So again, it reflects that sort of general optimism in the market today.
Okay, let's get a quick look at some of these small to mid-cap companies that led the market. And Oh, looks like they're not working today. That's all right. Let's just sum it up, shall we? Get to look at this market and where the last of the session finished. And we were up by a percentage point by the end, Kyle.
And we're up 1.04% for the day. So a little bit of a pop there in the post-market auction. We've said it before, but it was very energy, materials and financials intensive. Not so strong in the healthcare and IT stocks, but nevertheless, we're back above 7,000. Well, for the first time, I dare say, in what's been at least a few weeks.
Oh, yeah.
So, in fact, that's right. Since more or less 3 weeks ago, we're back above 7,000. So, I guess here's hoping that's a sign of things to come.
As we record this, the U.S. futures are pushing higher, so that's a positive. Asian markets mostly stronger, a bit of an exception with the the Shenzhen Composite, I should say, in China. But otherwise, look, for Tuesday, should we call it the Take It Tuesday? We'll take it.
We'll do that. Sounds good to me.
See you tomorrow.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.